G'day folks, welcome to the midweek update on natural gas. Here we've got the monthly, weekly and daily charts. And on the monthly, we're broken up into a bullish momentum with our CCI 150 breaking above its moving average. On the weekly, likewise, it's bullish, both on the price and on the CCI 150. And on the daily, it's still running along the top of that CCI 150 moving average band. You'll notice here we had a resistance up here at 25.71 on our previous update, and since then it's broken up higher, and now it's got this new resistance at 29.02, so it may pull back from there in the coming hours or even days. Looking at the daily and the hourly charts in more detail, again using the daily as a reference, you can see here I've added a couple of bullish arrows, so you would have gone long when it broke above the CCI 150 and gone long there, and you'd still be in the trade today, and you'll probably close it out once it breaks below this EMA 9 moving average, or if it breaks inside this moving average band on the CCI 150. Your choice. I'll let you decide on what your exit strategy. But here on the hourly chart, if you're trading on the intraday, we did draw this previous pullback we had a double top here on the CCI 150 versus higher highs on the price. We drew this target area. Now that's been beyond that point there. You can see there that's a 38% level of that target area of the Fibonacci, but that's extended up to this point here, so that would have moved that. If you move that rectangle, that'll be that new target area there between that 38% level. You can see there it hit it just inside that range, below that 23% level, and it's gone higher. So again, I don't trade these divergence, this bearish divergence. I don't trade that. I look at it as a potential area of weakening price or a pullback. Sometimes it breaks a lot lower than this area, but more often than not, it just hits that 38% level and bounces up from there. Now, again, as I said, it's actually broken up to this new resistance at 29.02, and we might see a bit of a pullback because what we do have here is higher highs on the price, and you'll see that point lining up with this CCI, very sharp decline. So you might see a pullback further from where it is at the moment, so just be careful of that. So again, going long only based on the higher time frame. So if the daily is going long, we only take long trades on the hourly as well. So for long trades, I'll put in the long trade arrows. You can see there. So during that period on the daily, you would have taken these long trades on the 1 hour time frame. So you can see there those arrows indicate entries, those crosses indicate closes potentially if they break below that CCI moving average range, or as I said earlier, if you want to wait for it to break below either the CCI or the EMA 9, your choice. That would have been an exit somewhere probably in that area. You could have taken up to that area when it broke below that moving average range on the price chart. Next we look at BOIL. That's still very bearish on the monthly. No CCI for it on the monthly. On the weekly, we still have a bullish divergence. That's been happening for a very long time now. No real significant move to the upside. So you can see there are higher lows on the CCI versus lower lows on the price. It's a bullish divergence. And on the daily, we do have a bullish movement as well. The CCI breaking above on the CCI and also above on the price chart. And it's actually just broken above that previous resistance we had at 11.03. So if we look at the daily chart here as a reference, taking only long trades with the CCI breaking above the moving averages, and on the hourly, and again if I put in the long positioning only, you would have taken those positions, and again similar to the natural gas price BOIL, you would have taken a long trade there when it broke above on the CCI, and you'd probably close it out when it breaks below the EMA 9, or even still be in a trade and wait for it to break into that moving average range on the price chart. So for KOLD, that's bullish on the monthly. There's no CCI for the monthly. On the weekly, we've got a bullish divergence. We did have a bullish divergence back here. You can see there it broke up, and it's actually broken up a lot higher. You can see there the lower lows on the price versus higher highs on the CCI, and that's continuing, and it's still continuing on the weekly. Although notice it's hitting in that moving average range. If I really drill down, it's in that moving average range, so giving us a potential neutral signal. And on the daily, we did hit this previous resistance up here at 85.10. It's bounced down from there, broken through this previous support at 61.65, and it looks like it may fall further. The CCI is still below that moving average range on the daily. On the micro view, You can see that again using the daily as a reference, taking only short trades. We take off the long positioning on this is the 1 hour chart, so you put on the short positioning. And you can see there, the latest trade would have been entry short at that point when it broke below the moving averages of this CCI and also the price chart, and you'd still be in a trade and wait for it. You could have broken out, you could have closed the position when it broke into that moving average range there, and that would have been right at the very bottom of that range there. Or if you want to wait till it breaks to this EMA 9, or wait for it to break into that moving average range of the price chart. Sometimes following the CCI exit strategy is a good idea, like in this case it would have been perfect, almost right at the bottom of there. But sometimes as well, the CCI is a bit early exit. You can see there back there we had a few early exits, even though the price did continue to fall off. So I'll leave you to decide which way is an exit strategy that you want to choose. Lastly, looking at UNG, now that's bearish on the monthly, also broken up in, still bearish on the, predominantly on the CCI as well on the monthly, but notice it's broken into that moving average range. So somewhat neutral to bearish at least on the monthly. On the weekly, we do still have a bullish divergence on the CCI, higher lows on the CCI versus lower lows on the price, and that is yet to break up significantly higher on the weekly. And on the daily, it's broken up through that moving average range of the CCI, and it's also above the moving averages of the price chart. Notice as well it's broken up through that previous resistance at 1520, so that's we'll see how far it's going to go from there. But looking at the micro levels, so again using the daily as a reference, only taking long trades. So we turn on the long positioning only. So again you can see there it's broken above the moving average of the CCI. You would have entered long entry there. Now you could have exited at that point there when it entered that CCI moving average range, which would have been near the top, near the high there, pretty much on that red candle there. Or wait for it to break into that EMA 9 and you would have exited probably on that red candle. Or if you want to wait for it to break into that moving average range, again, your choice, but that's another exit strategy to choose. So again, just basically watch it and see how it goes in terms of getting the most out of your return. So hit that like and subscribe button. Thanks for watching the video, and I'll see you in a future video.